Good morning and welcome to this weekly market update from MRC Markets. Today is the 21st of February 2014. What I'll do today is go through technical analysis on Euro, Dollar, Cable, Dollar, Swiss and Aussie. Just going to review what's been going on in the markets this week, what I've been looking at, and give some sort of outlook for next week. We're going to start doing these videos every Friday now. I think it's good. You get sort of two videos in one. You get sort of review of what's been going on this week and some sort of outlook for next week as well. So if any new followers out there, we have three moving averages on each of these charts. The red one is a 50 simple moving average, the purple is 100 simple, and the gold is a 200 simple moving average. We'll not make any triggers recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website, which is www.mrcmarkets.com. Okay, let's have a look at the euro. So this is the weekly chart. Let's just briefly have a look at the weekly. Don't want to spend too much time on it. It's just for any of the sort of long-term traders out there. We've been speaking about this for some time now, so this is one that's still in play. Sellers coming in at a sort of 61.8, trying to bring it down, but the buyers are holding it above this 50%. So it's currently just chopping inside this small range. In terms of the weekly candles, the last couple of weeks weekly candles have been nice and bullish. Last week's is just pretty much a standard bullish continuation pattern. This week there has been some indecision in the market. It's been decent. I think it's been quite cable's been much better, but there's been some decent trading opportunities out there, but it has been quite choppy. You can see we've got a decent bit of upper wick on this current weekly candle, so there is some indecision out there. Maybe a reversal pattern could happen at the end of this weekly candle close, so it'll be very interesting to see at the end of the day where this candle is happening, what sort of shape it will be. That's pretty much it in terms of weekly. Let's flip to the short-term charts and see what moves have been out there. So in terms of this daily chart, this move is we had this one here, remember, this fib here came off the 50% and we sort of pierced these highs and it struggled to get above these highs. So the one sort of 32s is still the sort of key line in the sand that the bears are going to want to be holding. In terms of stuff that I've been looking at this week, and because we speak about these setups quite often, those sort of big ones, let's just focus on what's been going on. This is one setup that's been fairly interesting in terms of sort of support and resistance, but mainly resistance obviously as it's a bearish fib setup. We had this sort of 50% cap in here, and then we broke above. We had a close above this 61.8 here, and you can then see it got a sort of cap at these sort of 137.60s, but it's come back down. You can then see that this 50% previous resistance now acting as support. A lovely spike there off that level to the pip. So in terms of setup, I wouldn't be looking at it too much, but just keep an eye on that sort of that 136.85 as an interesting level, because that's the sort of key line in the sand, I'd say, for this pair. And in terms of this, in fact, let's go to this. That's the daily pretty much done. There's nothing majorly interesting on that, apart from, I suppose, keep an eye on this trend line if we get some heavier action this week. So it's still in an uptrend. You have to keep that in mind for sort of context reasons. In terms of the four has been really interesting. I think we've had this 50% set up here. Remember that played out. So buyers coming out at sort of 50% to 61.8% range. So the next move that I'm focusing on is this dip here. But of course, what you do have to keep in mind is that there's nothing stopping it come back down and potentially testing this trend line. So it's a slightly riskier move, I'd say, but it's all about just keeping an eye on the price action. If it does come down towards this 50%, then keep an eye on this sort of 136.67s and see what the action is. If it reverses up, then it could just be another dip that's going to get bought and will rotate higher. So that's the outlook on the 4 hour really. And in terms of the 1 hour, it's the same move really. So it's that move there. That's the recent swing low, and the reason we're using that swing low is because that's where we bought off. That was the previous 50%, and it is the most significant recent swing low. And you see currently it's just sort of chopping Chopping, what's the level out on here? So in terms of just purely round numbers, you got 137s. Oops, that's not one thing. What have I done there? I wrote that on the wrong thing. 137's key support. You can see a lot of wicks around there. So you can see currently, well, let's bring that down. What it's been chopping at in the last sort of couple of days really is this very tight range between 136.80s really to 137.22. So it's just very, very choppy. And in order for it to go above, we just need to see an hourly close either side here, and I think we should get some decent action. But in the meantime, I'm not majorly interested unless we get some sort of breakout out of those two levels. And then, but I think it will close below, to be honest with you, and then come down towards this 50%. And also you can see we've got this previous highs around here, so we can get some sort of previous resistance turned into new support at around this 50% level. So keep an eye out on that. But that's really it, to be honest with you, on the euro dollar. I think cable's been a really, really interesting chart, and let's have a look at this one now. So in terms of the weekly, last week's weekly candle really, really bullish, and we got a weekly close above this 2010 high here. You can see to the left. So basically, the 167s. 167s was that 2011 high, sorry. And you can see this week, as it's such a big weekly candle, what you normally see is a retracement at the start of the next candle. And that's what's happened. But what has been surprising is that normally you see the retracement at the start of the week, and then you'll see it continue to fly up at the second half of the week. But it's leaving it quite late to do that. So I mean, there's nothing stopping it ripping higher today and forming a nice sort of another sort of bullish continuation candle. But you got to remember, we've had a really strong uptrend here, and I personally think it's been due a retracement, especially around these sort of wiki highs here. I spoke about a couple of weeks ago. I thought we'd retrace back down. I thought it'd be the sort of key catalyst to retrace back down towards these moving averages, but we haven't had that, and it's still in grind higher mode, and it's going to look to sort of take out these. It looks like it wants to take out these 2009 highs here, but of course there's nothing stopping it retrace. So I mean, in terms of weekly, nothing majorly interesting apart from that sort of the 167s really. So keep that line on the chart there. In terms of the daily, I mean, as we're doing these videos on a weekly basis, the same move in the daily is the one that I'm looking at on the 4 hour. So this move here, this is the fib that I've got my eyes on personally. I think it looks like it wants to come back down towards this sort of 50%, which is at one spot 65.37. But what is currently holding it at the minute is, you can see this recent swing high around here, which is 166.50s. 166.50's previous resistance is now turning into new support. So this is the key line in the sand, which is holding up, which is propping up cable at the minute. And you can see we've had some choppy action in between this, but in terms of this week, it's been some really nice price action. And you can see there on the 4 hour, multiple spikes below, and the ball's keeping it up and closing it above this level, and it's going to try and rotate higher. I think we'll definitely get some sort of bounce up today, or over the start of next week towards this 167. So keep those two lines on your charts, and you can see, even if you just bring it into the shorter term time frame, and you draw the other round numbers on there. So so let's draw one sort of 67.50s as well, and then you've got the 166s, which is below. In terms of this trading short-term price action, I'd definitely leave those round numbers on there and just keep an eye on, and just look at all these sort of spikes here. Just use the brown lines, the sort of more the normal support and resistance lines. You can see classic support there, 166.40s, multiple pierces below, rotations high. So if you look at the sort of the 30-minute or even the 1 hour chart, it's flipped to the 1 hour actually. So sort of 1 hour reversals above, multiple opportunities here for sort of buying, scalping opportunities, rotating higher towards these sort of 167s. Then you've got key resistance around here as well. So some really nice action this week. I mean, yes, it has been quite choppy, but that doesn't mean that you can't just trade the range. If it's chopping in between the range, then just trade the range. It's the obvious thing to do, surely. And just keep an eye on the sort of short-term price action. But yeah, in terms of sort of going into next week, for me, it's all about this sort of that fib setup there. So it's the same on the daily as on the 4 hour. And it's all about this one sort of 66.50. So that's the key line in the sand at the minute. The 166.50s. If we're going to get down to towards 50%, we need to get a close below that. But it looks like it's currently holding up at the minute. So all about the sort of 4 hour. Well, there's the daily chart. In terms of 4 hour, you need some sort of significant closes below that, but the multiple wicks below are indicating that it's just going to keep on grinding higher on this cable chart. But also keep in mind that 167 level, because that's the key level on the weekly on this cable chart. So there's key levels there, two big levels, 166.50s and 167s. Dollar Swiss on the weekly. It's all about, there's just one level that I'm majorly interested, and it is the 0.89. I'm just going to change that to pink. I use pink for the sort of the round numbers, and use brown for the sort of the normal levels. So 0.89s on the weekly is all I really care about, to be honest with you. We've had 1, 2, 3, 4, 5, well 6 actually, 6 piercings below of this level and 6 closes above. So weekly candle close this week, it's sitting right on it at the minute. A close below, and we could get some quick traction down. I mean, you can see there's a lot of room below that, no major supports. Maybe this one here to the left, but of course it's looking like it's going to close above, because we've formed another sort of lower wick here. But things can change quite quickly. We've got a bit of data out of 1:30 today from the US. So that could be a key sort of catalyst and decider for where this weekly candle closes. But the odds are currently that it's going to close above, and in that case it means the bias is still towards a rotation upwards towards this sort of 50-day moving average, in my opinion. In terms of the daily, you've got a nice sort of support area around here at surprise, another sort of 50 pip move, which is 0.8850s. 0.8850s, key support here as well. You can see it's a nice sort of action. I mean, it got front run a bit, but in terms of the last sort of 3 daily candles, nice and bullish there, but it's looking for a daily candle close above that. If we do get a daily candle close, then yeah, the odds are towards the sort of rotation towards that 50-day moving average. And in terms of the 4 hour, I mean, to be honest, I've been majorly watching dollar Swiss that much this week. I've purely been looking at cable, to be honest. I think it's been some really nice moves on cable, but we've spoken about these dips before, so nice moves there after 61.8, and then just extend that low. So if we do get a rotation towards the upside, then this will be one move that I'll personally be looking out for. Similar to Euro, sort of on the Euro, that recent swing low to swing high, we've been saying dollar Swiss has been a really sort of nice mirror image chart. That's the fib in the opposite direction. So if we do start to grind higher, then keep an eye on this 50%, which comes in at 0.8947s. So that'll coincide with another nice round number, which is 0.8950. So the 50 pip increments have been really nice on dollar Swiss, as you can see, and I definitely leave that one up on a chart. And to be honest, if we flip towards the 1 hour, it's the same move really. The exact same fib. I leave that up on the chart. And if you're looking at shorter term, if you're looking to sort of buy it all the way up towards that level, then surprise, if you look at this move here on the 1 hour, zoom in a bit there on this one, fib in the opposite direction, you can see pretty much textbook stuff, pretty much to the pip there, from the low of this 1 hour chart to the high. Nice move up, retracement, bam, to the pip off the 50%. And we're grinding high, and it looks like it's going to take out, well, I mean, this current candle is quite wicky, but I wouldn't be surprised to see it continue to grind higher for the rest of the day, and that's all the moves I'm interested in on the dollar. So it's been nice and technical that. Aussie, in terms of the weekly, the two fibs, obviously we've spoken about this one a million times, and then now what I'd be looking out for is moving that low down and then moving the high down to the swing high that we got sold off of that 50%, and that's the fib I'll be looking out for. The 50% comes at 0.9207s. In terms of the last sort of few weeks, weekly candles been nice and bullish. Just sort of looks like it's just it just wants to grind higher towards this 50%. I do think we'll get there within the next couple of weeks. If you flip it to the daily, that same fib move, you can see this. Well, the previous daily candle, nice and bullish, nice sort of continuation pattern there, nice hammer or hanging man, whatever you want to call it. Yeah, I think the daily just looks like it wants to come up towards this 50%, but it is getting caught at this 100-day moving average at the minute, so we need to get a daily close above that, but I do think we will get there. And then of course it's got the 200-day moving average to fight out as well. In terms of the 4-hour, if we get any more retrace towards the downside, then that will be the fib I'll be looking at for. The 50% comes at 0.8868, and that coincides with previous resistance around here. You see those spikes there, so that previous resistance could turn into new support, but of course it needs to come down here first, and it's still a fair way away from that. The other level that's quite interesting, I think, is 0.8940s. If you want to keep it simple and to the round numbers, then just keep it 0.8950s. But you can see in terms of the 4-hour, I wouldn't use that. I personally use the 8940s because we've had 4-hour closes below the 8950s. 10 pips is quite important. And if you flip it to the 1 hour, it's the same thing really. We had a lovely 1 hour reversal this week. I think that was on Monday. Nice 1 hour reversal, lovely hammer candle, and we've got a nice rotation towards the upside. The sellers, shorter term sellers that are out there, I thought we'd be looking at this move here. It's been quite a nice move this week. Off the 50%, you see currently this current 1 hour candle had a nice spike, test this 50%, and it's currently, the sellers are coming back in trying to push it back down towards this sort of 8940s or that previous 50% that we spoke about, so keep an eye out on that as well. And yeah, that's pretty much it for today. Hope you found that video useful. Hope you have a great rest of the week trading, and I'll catch you next Friday. Take care, have a great weekend. Thanks for watching.